What if you could invest $100,000 in a single ETF and generate consistent income from it? Today, we're talking about JEPQ, JPMorgan's Nasdaq Equity Premium Income ETF. If you're looking for high-yield dividends and a way to potentially hedge against market volatility, you're in the right place. Be sure to stick around to the end for some ETF comparisons that'll blow your mind. Now, let's break down what a covered call ETF is, how JEPQ generates income, and whether it deserves a spot in your portfolio. First, let's talk about covered call ETFs. These funds use a strategy called the covered call approach to generate income. But what in the world does that mean? Covered call ETFs own a basket of stocks, just like any other ETF, but they also sell call options on some of those stocks to generate additional cash flow. This strategy has been around for a while, but gained popularity in the early 2000s with the rise of options-based ETFs. Let's break it all down and take a look at some examples. Imagine you own 100 shares of a tech stock trading at $100 per share. You decide to sell a call option at a strike price of $105, which gives the option buyer the right, but not the obligation, to buy your shares at that price before the expiration date. In return, you receive a premium up front. If the stock stays below $105, you keep your shares and the premium. If it rises above $105, your shares get sold, but you still keep the premium, providing additional income. JEPQ applies this covered call strategy on Nasdaq stocks while maintaining a core portfolio of high-quality growth companies. By selling call options on a portion of its holdings, JEPQ generates consistent premiums, which are then distributed as monthly dividends to investors. This strategy creates an attractive yield, often much higher than traditional dividend ETFs. So why would an investor choose a covered call ETF like JEPQ? There are a few key advantages. 1. Higher yield. The premium income supplements dividend payments, leading to an enhanced yield. 2. Hedging against volatility. Since the ETF earns income regardless of market direction, it can act as a cushion during downturns. 3. Diversification. Instead of picking individual stocks, you get exposure to multiple companies within the Nasdaq, reducing company-specific risk. Before jumping in, here are a few things you should know about JEPQ. 1. Dividend yield. JEPQ currently boasts an attractive yield of 9.82%, significantly higher than broad market ETFs like QQQM or SCHD. 2. Dividend reinvestment. Utilizing a dividend reinvestment plan can enhance compounding returns over time. 3. Historical performance. While covered call ETFs provide steady income, they might underperform in strongly bullish markets since call options cap upside potential. 4. The expense ratio. JEPQ's expense ratio of 0.35% is something to consider, as it impacts net returns over the long run. 5. Tax implications. Covered call income is typically taxed as ordinary income rather than qualified dividends, which can affect tax efficiency. 6. Risk factors. While JEPQ offers stability in choppy markets, it can lag in major bull runs, making it important to balance with other investments. As for me, I employ a 4-fund balanced portfolio. How does JEPQ stack up against other ETFs? Well, let's see. JEPQ's inception date was in May of 2022. So, for these comparisons, we'll use the time period from January of 2023 through February of 2025. Let's compare it to JEPQ's sister ETF JEPI. JPMorgan's other covered call ETF is focused on the S&P 500 rather than Nasdaq stocks. During the same period, JEPI would have grown to $122,256, a 6.7% return. JEPI pays a dividend of 7.18% currently. This would equal an annual dividend payout of $7,180. This ETF pays monthly, so the income would be $593.33 per month. Then there's QQQM, a traditional growth-oriented Nasdaq ETF without covered calls. A $100,000 investment would have grown to $199,018 during the same time frame, a 39.1% return. But QQQM only pays a dividend of 0.60%. This would generate dividend income of $600 annually, but paid in quarterly distributions of $150. Good growth, but almost no dividends. And there's the always popular SCHD. It's a dividend-focused ETF with a different strategy centered on value stocks. Your $100,000 investment would have grown to $118,853, an 8.7% return. SCHD pays a dividend of 3.53% quarterly. This equates to an annual dividend income of $3,530 and quarterly payments of $882.50. This would be equal to $294.17 per month. But again, SCHD pays quarterly. Each of these ETFs has its strengths and weaknesses, so it's all about your investment goals. But now let's see what would have happened if you had invested $100,000 in JEPQ. A $100,000 investment in JEPQ in the same time span would have grown to $173,424. That's a 30.2% return. This investment would have surpassed the S&P 500 by over $11,000. JEPQ's dividends are paid monthly. Your $100,000 investment at the current annual yield of 9.82% would generate $9,820 annually, or $818.33 per month. Far more than the other ETFs highlighted in this video. While past performance isn't a guarantee of future returns, this analysis helps us understand the potential income stream. JEPQ presents an interesting option for income-focused investors, but it's crucial to understand both its advantages and risks. To be transparent, I hold a substantial position in JEPQ. In fact, I'm so confident in JEPQ's potential that I'll continue to invest regularly, regardless of market conditions, to help smooth out the highs and lows and steadily build my position over time. I wanted to share this with you so you'll know exactly where I stand, and to reinforce that the insights I offer on JEPQ come from my own personal experience with this ETF. As always, please remember that my investment choices are tailored to my financial goals and risk tolerance. Are you currently invested in JEPQ, or are you considering adding it to your portfolio? Let me know in the comments. I'd love to hear your thoughts. Also, make sure to like this video and subscribe for more dividend investing insights. Thanks for watching the Stock Market Matters channel. I'm George Mayfield, and I'll see you in our next video.